This new strategy gives 68% winning rate. I backtested for a month, and I am going to share the results with you. This strategy is different from our current strategy, and it does not include supply and demand, liquidity level, imbalance and stuff like that. I am going to show step by step how to apply it on your chart, so pay a close attention now. The tools that you need are 3 exponential moving averages, the 13, 50 and 200, and TDI indicator, the so-called Traders Dynamic Index. First, you must plot the anchor, which means you must find double tops and bottoms, head and shoulder or any kind of reversal formation that you know. I mentioned the popular ones. Second, EMA 13 and 50 cross each other. After this event, price moves away approximately 25 to 50 pips. Price must comes back to retest the EMA 50 with rejecting candle patterns, and the most important, it must close below or above 13 EMA. The third confirmation, on TDI indicator below, the RSI and signal line cross each other above or below the 50 level. We can put the stop loss above or below the high or low. Another option is to use ATR indicator to find it. We have uploaded a video about this indicator, so you can check it on my channel after this video. After establishing the stop loss, you can use 1 to 2 risk reward or use average daily range to put your take profit level. In a nutshell, these are the rules of this strategy. Now it's time to back test it. The currency pair is British pound versus Japanese yen. This strategy works best on 15-minute time frame. The first trade, we have a clear double top and exponential moving average crossover, but as we can see, price didn't reject the 50 EMA and broke above it. No confirmation, no trade. Now we have the opposite of the previous setup. A double bottom pattern and the EMA crossover. After a long impulse in upside direction, price finally pulled back to 50 EMA and closed above the 13. Let's check for the third confirmation on the Traders Dynamic Index indicator. The RSI and signal line cross each other above the 50 level. We can put the stop loss under the price low, or we can use ATR indicator to define it for us. The take profit level is recommended near ADR level, the average daily range. Price consolidated for a while and reached the full target. Next setup, we defined the anchor on top. We have a clear EMA crossover. Our goal in this moment is waiting for the pullback at 50 EMA line. As we can see, price pullback and closed below the 13 line. We have the confirmation on the TDI indicator too. The parameters are all set, and we can enter a sell trade now. Price hit the target. The second or the third pullback to 50 EMA are riskier than the first one, but you can enter a sell trade after the confirmations. As we can see, price continued in a downtrend for a while. We could have added new sell positions, but I preferred to trade only the clear setups according to strategy rules. Finally, we have a crossover in opposite direction with double bottom anchor below. Price pullback and dropped below 50 EMA and didn't bounce back right away. The TDI crossover is below the 50% level, so the confirmation is not exactly as the rules of strategy, but if you could enter a buy trade, this is how it is done. I want to underline that is not recommended to hold the trade overnight. If the price consolidates for a while, is most likely to hit your stop loss. We have a crossover, but we can't define a clear anchor on the top. We have a large consolidation that can be considered as an anchor, and the exponential moving average crossover. Once again, we didn't have all confirmations to enter a buy trade. After a considerable time without any trade confirmation, we found a double top anchor and a crossover. The only red flag on this setup was the small drop from the EMA lines. But all the parameters were okay, including the TDI crossover. Price consolidated for a while between entry level and the stop loss, and in the end stopped us out. As I mentioned previously, if the price consolidate too long has higher chances to stop us out. Let's continue with all setups. In the end, we are going to calculate the percentage for each of them using 1% risk. As you can see, the strategy generated 16.65% in profits during 34 days, with a 68% profitability. Testing for 1 month is not enough, but gives us an idea about the profitability of the strategy. Of course, in real time, this could have generated less than 16% in profits, due to involve of emotion that trading has. I hope you have enjoyed the video. See you to the next one.